Welcome to Channel's Business Global with me, Juliana Olayinka, from our New Look studios here in London. On today's show, as high interest rates, stubborn inflation and a tight labour market continue to drag down the UK economy, the Chancellor of the Exchequer warns corporate Britain to stop profiteering from consumers who are struggling to get by. I'll be catching up with our business correspondent Simon Pusey with the latest from Downing Street this week. And senior officials from the US government, the EU and the G7 have told so-called peace brokers from the global south that Russia's illegal war in Ukraine will only come to a resolution when President Putin withdraws his troops. African analyst Tamzanka Zhou will be joining me for his assessment on the evolving role of Africa in Europe's deadly war. Then later, I'll be looking back at some of the biggest business news stories of the week. But first, Nigeria's President Bola Ahmed Tinubu conducted his first official foreign trip last week by joining other world leaders in Paris for the new Global Financing Pact summit. The two-day gathering, led by Barbados Prime Minister Mia Mottley, was an important political moment to find financial solutions for developing nations that are hit by climate-driven disasters. Delegates were told that a $100 billion pledge for the Global South to deal with the impact is within sight.
I want to thank all those countries, developed countries as well as emerging market economies, who have pledged to provide part of their special drawing rights that were allocated in August 2021 so we can lend at highly concessional terms for 20 years with 10 and a half years grace period. In other words, provide vital resource to low-income countries as well as to vulnerable middle-income countries.
Climate change is dampening agricultural yields. It's driving food insecurity in many parts of the world. And I saw this on full display when I visited 3 African countries earlier this year. Indeed, the smallhold farmers I visited in Zambia described the toll that extreme weather events and floods are taking on their livelihoods. And they didn't make any distinction between national challenges and global challenges. In addition, threats to global health disrupt entire societies and economies, and the pandemic really led to the first global increase in extreme poverty we've seen in decades.
Away from the summit, the president, alongside his team of special advisors, took part in a series of bilateral meetings, including talks with Alain Berset, the president of the Swiss Confederation, Akinwumi Adesina, the president of the African Development Bank, and Professor Benedict Orama, president of Afrexim Bank, who we managed to catch up with.
Well, discussion with the president today, of course, cut across quite a number of things. First, my team and I went to congratulate him for his inauguration, and also took the opportunity to brief him on the activities of African Export-Import Bank in Nigeria. Nigeria is a very important country to Afrexim Bank, being in aggregate the second largest shareholder of Afrexim Bank. We also one of the largest markets where Afrexim Bank operates in. We also have many initiatives going on, including we are building a hospital, the Africa Medical Center of Excellence, developing an Africa Trade Center. We just completed an Africa Quality Assurance Center in Shagamu. So a lot of investments in the country was important. We carried a new president along. We also took the opportunity to hear from him the plans and to also discuss the reforms he had already initiated in the petroleum industry, and also with regard to the exchange rate policy. We touched on the issue of climate, where I think we we felt that there was a need for a balanced approach that recognizes that that African countries contribute the least to the emissions that are causing all the problems, but they carry the brunt of the consequences. So we must be careful to apportion responsibilities. Those who cause the damage must be responsible in curing that. Those of us who have not even reached a fair share of the per capita emissions should be allowed to use the energy we have to develop our people and ourselves, and be supported to deal with the consequences of the emissions in terms of the drought that is going on, the violent extreme weather that we are experiencing, flooding that we are experiencing, and so on and so forth, including what is happening to smaller land economies that are almost being washed out because of rising temperatures and sea levels.
Staying with Nigerian news, in a recent interview published in Bloomberg, the chief executive officer of Seplat Energy said he remains committed to purchasing Nigerian oil and gas assets from ExxonMobil. Under the proposed deal, which first became public early last year, the Lagos and London listed energy firm agreed to pay Exxon $1.3 billion for a 40% operating stake in 4 shallow water licenses. State-owned NNPC, which owns 60% of the permits, has opposed the sale, but Seplat CEO Roger Brown is convinced that early signals from the Tinubu administration, which include a recent meeting with Exxon executives in Abuja, appears promising for supporters of the deal. If the transaction goes ahead, it would become one of the biggest divestments in Nigerian history. To African business news now, and the Zimbabwean dollar gained for the first time this year following a raft of policy measures taken to stabilise the economy. On Tuesday, the currency firmed 9.4% against the US dollar, and according to the Reserve Bank of Zimbabwe's Monetary Policy Committee, exchange rate volatility, a key driver of inflation, is beginning to ease. Back here in Britain on Thursday, the UK Court of Appeal ruled that the British government's £140 million deal to send illegal migrants to Rwanda is unlawful. Flights to the country will now remain suspended ahead of an expected showdown at the Supreme Court. The Rwanda plan is a core part of the Prime Minister's pledge to stop small boat crossings, which is an important pillar of the new illegal migration bill.
Well, the system is rigged against the British people. It's as simple as that. That's why we're changing the laws through our illegal migration bill. That's why we are rolling out a groundbreaking partnership with Rwanda, which we believe is lawful, with a country that we believe is safe. So we need to change the system. We need to change our laws. That's how we're going to stop the boats.
In other UK business news, Thames Water saw their bonds tumble on Wednesday as concerns that the government would be forced to step in and nationalise Britain's biggest water company deepened. According to regulators, the embattled firm has a debt pile of more than £15 billion, and bosses have been locked into talks with the government about the options of a temporary nationalisation. Away from water, there have been more concerns about how the Treasury can rein in spiralling costs that threaten consumer confidence in the UK. Food inflation currently stands at 18.4% in Britain, and grocers are coming under increasing pressure to pass the savings they are starting to see on wholesale items down to consumers.
It's been described by Sharon Graham, the General Secretary of the United Union, that the biggest supermarkets in the UK are engaged in a quote, grotesque display of profiteering at this time, at a time when millions of workers are struggling simply to put food on the table. What do you say to that?
We make, and this is the whole group, 4 pence in every pound, which I don't think is any example of profiteering. We really, without customers and without their trade, there is no Tesco. And we have doubled down on our competitiveness, and genuinely, as we've said recently in our quarterly update, we are the most competitive we have ever been.
Similarly, the Chancellor has issued a warning to banks not to be overzealous about mortgage repayments and to also pass down the successive Bank of England interest rate hikes to savers.
Well, there are two groups of people that we are particularly worried about. The first are people who are at real risk of losing their homes because they fall behind in their mortgage payments. And the second are people who are having to change their mortgage because their fixed rate comes to an end and they're worried about the impact on their family finances of higher mortgage rates. So today I agreed with the banks and the principal mortgage lenders three very important things. The first is that absolutely anyone can talk to their bank or their mortgage lender and it will have no impact whatsoever on their credit score. That's really important. A lot of people worry about that. The second is that if you are anxious about the impact on your family finances and you change your mortgage to interest only or you extend the term of your mortgage and you want to go back to your original mortgage deal within 6 months, you can do so, no questions asked, no impact on your credit score. That, I think, is going to give people a lot of comfort and stop people worrying about having conversations with their banks when they are worried about their financial situation. And the final thing is for people who are at risk of losing their home in that extreme situation, the banks and mortgage lenders have a number of things in place. It's the last thing that they want to do to repossess a home. But in that extreme situation, they've agreed there will be a minimum 12-month period before there's a repossession without consent.
Well, for more on this, I spoke to our business correspondent Simon Pusey in Westminster for further analysis. Simon, now that Partygate appears to have been laid to bed, the government have been focusing on the business of the day, which is halving inflation and bringing the economy back to what it was pre-COVID. There have been lots of issues around supermarkets and big corporates profiteering off the back of beleaguered Brits. Talk to us about what's been happening.
Yeah, so inflation is around about 15% at the moment. That sounds very high, but it's actually gone down in the last 2 months. Consecutively, it's gone down, but it still is far too high. And it's really hard. Rishi Sunak wanted, that was part of his pledge, wasn't it, to halve inflation. Well, it's really hard for him to actually get on top of that because that's not really what he's responsible for. That's more the Bank of England, and they're trying to do that with interest rates, which they've increased, and they're probably going to increase again to about 6.5%. So people with mortgages are really, really struggling at the moment. And yeah, the cost of living in general, you're seeing it with the energy prices, and you're seeing it across the board really, but especially, as you said, with food prices. And food prices have been going up and up and up, a lot of basic foodstuffs, and it's only really the sort of sugary and high-fat foods which are the ones that are actually affordable for families. We saw this in the last crisis that we had in terms of 10 years ago when there was the last financial crisis. Was a lot of people then had to buy these cheaper foods. So there is help out there available at the moment. There's a £500 voucher today for families that qualify for it that is being introduced, and they can go to supermarkets, spend this £500 because they're the most needy. So the government are doing things. There's also a Department of Work and Pension scheme where they will give out cash bonuses or just cash to families that need it. But it is really, really hard, and it's hard to see how Rishi Sunak and the Conservatives can kind of do more because on a macro scale, this is something that's kind of out of their hands. Rishi Sunak, maybe unwisely, has said, just hold your nerve. Hold your nerve doesn't sound great. Hold your nerve is what you do in casinos and when you're playing poker. It's not a very great phrasing, I think, for people who are really, really struggling at the moment. There is help out there available, but it's really, a lot of this seems to be fairly out of control. A lot of Conservative Party members would say, well, this goes back to the Ukraine war. Since Russia has invaded, inflation has gone up so much, and that's a global thing, not just the UK. But it's something that the UK has had exacerbated, not least because of Brexit and things like that. So they need to find something to do to help, because this is really affecting people at a time when we always talk about it, a general election might be around the corner.
Coming up on Channel's Business Global, Africa analyst Tamzan Kajo joins me from Westminster with his assessment of the latest warnings from Ukrainian allies to Africa's peace delegation. And I'll be looking back at some of the biggest business news stories of the week. All of this after the break. Do stay with us. Welcome back to Channels Business Global with me, Juliana Olayinka, from our studios here in London. In a moment, I'll be sharing an interview I conducted with Africa analyst Thames Water in Westminster. But until then, here's a breakdown of the biggest business news stories of the week. Boots, Britain's biggest high street chemist, is to pull down the shutters on 300 shops over the next year as part of a cost-cutting drive by its American owner. The company will reduce its estate from 2,200 to about 1,900 stores, amid speculation that the business could be put up for sale. Boots, which employs about 52,000 staff, plans to offer new jobs at other shops to all employees affected by the process. The luxury shoemaker Manolo Blahnik will move to a new London headquarters after purchasing a property in Mayfair. The group, famous among Hollywood celebrities like Jennifer Lawrence and Zoe Saldana, spent £35 million on a Grade 1 listed building on Old Burlington Street. According to their most recent accounts, the private firm experienced sales growth of 65% in 2021, and bosses have recently boasted of a strong financial performance, international growth, and global online development. Workers at the British Museum are to stage a 6-day strike next month in an ongoing civil service dispute over pay, pensions and jobs. Members of the Public and Commercial Services Union will walk out from July the 11th to July the 16th. According to union bosses, the government recommended employers to pay staff a non-consolidated £1,500 lump sum in recognition of the cost of living crisis, but the British Museum is refusing to do so. Now to our final story. Senior officials from the US government, the EU and the G7 have told the so-called peace brokers from the global south that Russia's illegal war in Ukraine will only come to a resolution when President Putin withdraws his troops. The development follows widespread criticism from Western allies about Africa's stance on Europe's war. For a further assessment, I was earlier joined by African analyst Thames Water in Westminster. Thames Water, it's always a pleasure speaking with you on Channels Business Global. We've managed to get out of the studio. We're in Westminster because the Palace of Westminster was a topic of conversation this week because the Foreign Minister, James Cleverly, made some comments about the African peace delegation led by Cyril Ramaphosa that went to Kiev to try and broker some sort of peace talks with the Ukrainian President Volodymyr Zelensky. Cleverly mentioned that perhaps there was an explosion or some sort of missile that flew into the city on the day that they arrived. Some said, was he saying, Putin was trying to assassinate one of them? It's caused a lot of concern. Do you think we should be looking a little bit deeper into whether or not Russia and Ukraine are taking Africa seriously?
Yeah, first of all, thank you very much, Juliana, for having me. I think what the British Foreign Minister said is, in many diplomatic terms, probably calculated, but there are so many others that are saying maybe he could have rephrased the sentence that he put out, because there are conflicting messages. There are people that are doubting that there was actually a missile at the time, so the jury is out on that. But even if it was not just President Cyril Ramaphosa of South Africa. There were other African presidents who were part of the delegation. But more importantly, when you look at the international rules of law, they were going to see President Zelensky in Kiev. So that would have been even more of a worry, because Zelensky himself cannot be a target. That's why he's allowed to go in and out of Ukraine, or when President Biden was in Kiev, nothing happens. Those are the rules of war.
Just as by rules?
You have to. Anybody that is engaging in war has to follow the international rules of war. And one of the underlying, probably the main issue, is that you can't target a leader. That explains probably why in the first days people thought Russia was going to march into Kiev, but then they withdrew after that. So President Putin himself can also not be a target in that same way, because if they wanted to try, if Ukraine wanted to try, they would have been trying that, but you just can't do that.
We're sitting in London, consumers of mainstream media, whether we like it or not, and you can't really see anything credible about the Africa Peace Delegation. There's lots of innuendo, a lot of people poking their finger at Cyril Ramaphosa, basically saying he's flirting with the West's enemy. But do you actually think this delegation is credible and the West should take them seriously?
So I think you have to go back to the old days when there was the Cold War, when the East and the West were still at each other's throats. Africa predominantly played the non-aligned movement role. So there's always a buffer and a depository. So African leaders can play that role. Africa has interests. They have to make sure that the economies in the global north are functioning well. If they are not, then Africa is affected. China was doing some peace initiatives, but we don't know what relationship Beijing has with this African delegation. But by and large, Africa sees itself as the ones that are in the middle. At least they can go into Kyiv and talk to President Zelensky. They can also go into Moscow and talk to President Putin at the same time. So it is all about that leverage where you are seen as a genuine neutral. Most of the countries in the West are aligned with Ukraine. Yeah. So it is difficult for them to play that broker or that peace convener, if you like, maybe at the United Nations level, but it will still require African leaders to lay that.
What is it about this particular delegation and this particular war that is making the West, especially America, uncomfortable with Ramaphosa's position?
It is simply because politically America is, already in an election year, if you like. So President Biden's administration would like to be seen as having the major role and control so that if the war was to end, it ends on their own terms. If former President Trump or any of the Republican candidates was to have a stage, they would say they have a solution. So it is very important in world politics, if you are a leader, to be seen as the one that has actually helped or made the difference in a situation. But also, the African leaders are going to negotiate things on their own terms, yes, not necessarily on what the Africans are saying. So this is probably, in my view, I've reported on a lot of these things over the years, so that is what I can say.
So now that Partygate has been finally laid to rest, government is back on business. And of course, Prime Minister Rishi Sunak is trying his best to halve inflation. We've got high interest costs, high borrowing costs, lots of people on the brink. That really is the fallout from this war. What's the actual fallout for people in Africa?
The fallout is huge, simply because the majority of the African economies are linked to probably former colonial masters, if you like. So most of Francophone Africa is linked to Paris, and most of the Commonwealth is linked to Britain, and so on. So what you will see is if the economies in the global north are affected, then that also means the African markets are going to struggle. But then there's something else that probably President Zelensky in Ukraine might have been ill-advised on. That is, when some of his people were dismissing probably the gravitas that the African leaders were coming with. The problem is most of European economies depend on Africa. If Niger was to close down its uranium, then France is going to struggle energy-wise, even beyond what's currently happening. If most of Africa was to say to Europe, you are not having our resources anymore, on the cheap, then that basically means these European countries that are supporting Ukraine will not have the economic power to be able to do that. But it is only because most people don't realize how important or how pivotal Africa is, not as a market, but as a source of what Europe needs. Most of the European economies will struggle to survive beyond a year or 2 years if Africa was to just close all the gates and say there's nothing that comes from Africa, or the European companies, whether in mining or in agriculture or services.
Thames Africa analyst, it's always a pleasure listening to your insights on Channel's Business Global. Thank you. Well, sadly, that's all we have time for today. But as always, do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channel's Business Global. Goodbye.